Well, okay. Wow, what a start to the day this morning we have with the Tesla up. Last time I checked was up around $6. Yeah, close to $6 at 193. Do I expect the continuation of this rally? I didn't expect the rally to come this soon or this fast or this hard. The only explanation that I can come up with, and maybe there's others, but the only one I can see clearly is this is FOMO with around concerning 8.8, which I started talking about several days ago and have done a couple of videos on. Will this continue? Will there be a pullback? Probably even today. That would be my best guess, is that we see this increase and then a pullback. And then maybe there'll be another increase tomorrow and a pullback, and it's not going to be a straight shot up to like 235 or something. Although, anything is possible depending on what people are starting to infer, and some of the new notes that are coming out, even just in the last couple of days. Okay, let's just go ahead and take a look. As the saying goes, if it looks like a duck, and right now it's looking like a FOMO duck all around autonomous driving. All right, let's go ahead. Tesla, it was speaking of companies that have just put out notes on Tesla. This is from Stock Talk Weekly. Stifel, STIFEL, initiated a buy with a 265 price target, implying a 45% upgrade. Well, that's less now. We believe Tesla is very well positioned to deliver robust multi-year growth in 25 to 27 and ongoing. In the near term, the revamped Model 3 and upcoming Model Y refresh should bolster sales, followed by the commencement of its next generation vehicle, they said Model 2. I've been referring to it as version 2.5, and then eventually the Generation 3 vehicle. This will likely garner even stronger demand. We also believe Tesla's AI-based full self-driving FSD initiative has the potential to generate significant value through sales of FSD, possible licensing agreements, and a critical driver of longer-term robotaxi. There you go, Elon, there's a name. And longer-term robotaxi initiatives. Noteworthy. Near-term risks include delivery levels following lackluster first quarter results, as well as near-term EV adoption headwinds and the U.S. election. We are initiating coverage and buy price 265. From Mario Nathal this morning, he says, this is from Morgan Stanley, Tesla will rescue the U.S. from the energy crisis single-handedly. Morgan Stanley just spoke on how Tesla is likely to be a key part of solving the problem of America's energy crisis amid war and the escalating energy demands of a booming AI industry. A spokesman for Morgan Stanley says, we believe that Tesla's capability in distributed energy generation, solar, and storage may hold some important cards in the evolution of the U.S. grid as energy usage of compute and / data. Rivian this morning was big in the news. Actually, it was big in the news last night. They get a $1 billion infusion from VW with a hope of $2 billion more. As AJ explained last night, it isn't all $5 billion going to Rivian. Rivian gets $1 billion, and then if they put together this joint venture, then Rivian will get $2 billion more, and then the joint venture itself, a separate company that will be set up between the two of them, will also get $2 billion. Rivian stock was up very nicely last night. This morning, last time I checked, it had come way off of the 60% increase and was only up 35%. Not a bad day if you're a Rivian stockholder. This will give Rivian a much longer runway to get to profits and also to positive cash. I think Rivian has a shot. I think that they could do things a lot differently and a lot better, but I think they have a shot. AJ says this is the bottom line. Volkswagen investment in Rivian is just another desperate attempt by Volkswagen to catch up in the increasingly important automotive software area. In fact, they've continually failed in the software area, and they continue to not be able to get it done. He wonders aloud why they didn't just license software from Tesla, who is the clear leader by a long shot. Nobody even thinks Rivian's in the same camp. I'm adding a lot of words there to what AJ said. All right, this is this morning, PR Newswire, the American. Oh, this should be in a minute. Let me come back to that. This is from Business Insider. Tesla is building electric vehicles far cheaper than anyone else. Let me repeat that. Tesla is building electric vehicles far cheaper than anyone else, and it's giving Elon Musk's car company a leg up even as more competition floods the market. Tesla's input cost per vehicle, the amount company spends on components like metal, glass, battery packs, wheels, and tires, it averages under $30,000 a vehicle, according to a new analysis from the Bank of America. That is $17,000 cheaper than non-Tesla EV components cost. $17,000 cheaper compared to $30,000. And about $10,000 cheaper than the industry average, including Tesla in the total. If you get an average, including them, it's $10,000 cheaper even than the average. It's cost savings like this that have fed Tesla's bottom line for years, driving industry-leading automotive profit margins that have allowed Musk to essentially control pricing for the EV market and left competitors racing to catch up. Even as Tesla's margins shrink and sales slow, the lower input costs keep Musk ahead of his legacy competition. I'm sorry, I'm going to read that again. Even as Tesla's margins shrink and sales slow, this lower input cost keeps Musk ahead of his legacy competition. Companies like Ford and GM are relying heavily on their gas-powered profits to fund their electric futures. Neither company has turned a profit on their EVs. In fact, no other company has turned a profit on EVs. Input costs are a key driver for how automakers set individual vehicle prices. So higher input costs will always lead to higher EV prices for consumers, putting anyone other than Tesla at a disadvantage in a price-sensitive green car market. Essentially, as long as it still costs Tesla's competition more to build EVs, these legacy automakers will never win Musk's price wars. I don't think Musk starts price wars. What he does is he reduces prices based on demand. That's especially problematic for companies like Ford and GM, as wealthy early adopters drop out of the EV market and are replaced by more frugal and practical green car shoppers. See my program yesterday that I did on this subject. All right, from Tesla Chan, the initial review of 𝐓𝐞𝐬𝐥𝐚, 𝐓𝐞𝐬𝐿, I think is his name, the CEO of 𝐓𝐴NG, has arrived. I've experienced this is his comments translated from the Chinese. I've experienced FSD version 12.3.6 in California the last 2 days, and FSD performs very well in Silicon Valley and on the highways, achieving high scores and handling road conditions very smoothly. I am touched that FSD has made great progress over the past few months. We will learn about their outstanding functional points and user experience from FSD. He goes on to say that China's roads are more complex and have more people and traffic than the U.S. I'm looking forward to the performance of FSD in China. We are looking forward to inviting Elon Musk to China and promoting the popularity of smart driving together through more exchanges across the industry. Okay. This is Randy Kirk, by the way. Please hit like and subscribe and notify. Today, of course, this is Scott Walter is normally who would be on today. It could still be Brian White, but we'll see what happens in the middle of the day. And then, of course, this evening, Jeff Lutz. Man, I missed having Jeff on last week. I got so many questions for Jeff, but that'll be later tonight. And thank you, Ted W., for increasing your Patreon membership from the $5 level to the $10 level. We need more people like you on this to support the program. Thank you for those of you who do, and please help any way you can. Just watching, hitting subscribe, those are great. Hitting like, always a great thing. Joining Patreon, that's really, really wonderful when it happens. All right, well, so May was the very first month since February 2023, that tonnage increased sequentially and year over year, according to ATA Chief Economist Bob Costello. This is, of course, my freight report, which nobody else gives you. You may or not, if you're longtime listeners, you know this, but if you're not, you don't know. Freight is one of the canaries in the coal mine. If freight is going down, if the number of units of product, things, whether the product is oil or whether the product is widgets or bicycle water bottles, then if the total amount of freight is going down in the United States, is evidence that there's a recession, okay? And if the total amount of freight is going up, then that's evidence that things are good. Well, the freight industry has been in a complete recession now for 2 years. And he says, while there was clearly an increase in freight before the Memorial Day holiday, it is still too early to say whether this is the start of the long-awaited recovery in the truck freight market. American Trucking Association advanced seasonally adjusted for-hire truck tonnage increased 3.6% in May after decreasing 1% in April. May was the first month since February 2023 that I just already said that. April's decrease was actually revised up slightly from their May 21st press release. Compared with May 2023, the index rose 1.5, the first year-over-year gain in 15 months. And this is the not seasonally adjusted index, which represents the change in tonnage actually hauled by the fleets before any seasonal adjustment, equaled 120.4 in May. That's a 7.1 increase above April. ATA's for hire truck tonnage index is dominated by contract freight as opposed to the spot market. All right, now this from Forbes. This is something I've been talking a lot about. We're talking about right now, Forbes is talking about the great, what do you call it? The great wealth transfer. I've been talking about that the whole time we've had a show because I've been talking about the great wealth transfer for about 20 years. Because demographics matter. Studying the future of population trends matters. If you want to be a futurist, if you want to know what's going to happen 10 years out, 5 years out, 20 years out, study demography. According to a study by Edward Jones in collaboration with Next 360 Partners and Morning Consult, nearly a third of Americans have or will be receiving an inheritance. Among those anticipating one, nearly half expected to come within the next 10 years. Half of that 1/3, so 1/6 of the U.S. population is expecting an inheritance within the next 10 years, marking what many have dubbed the great wealth transfer. I had not seen that stat before. That's why I'm bringing it to you. It's starting to happen, and that's the kind of the percentage of the U.S. population. 1/6? Think about that. Of the U.S. population is going to get some kind of inheritance within the next 10 years, or they believe they are. All right, this from CNBC. Fears among top corporate CFOs about shaky consumer demand have hit a 6-quarter high. Oh, I know I've been reading a lot of things twice this morning. Forgive me, but I just think this needs to be said loudly. This is what I've been talking about. This is what we need to be concerned about. The market has not baked it. If they're baking it in, I can't see it. Fears among top corporate CFOs about shaky consumer demand have hit a 6-quarter high, according to the latest CNBC CFO Council survey. The Q2 survey, the first time since the beginning of 2023, that over half of CFOs cited consumer demand as the biggest external risk to their business. This is why you listen to this show. Nobody else is going to be talking about this today. Consumer demand fears among CFOs have been rising in recent quarters and match evidence from the market across multiple sectors, with fast food chains rushing out value menus and car dealers having more difficulty moving inventory. The 54% of CFOs who cited consumer demand as the biggest risk is up from 18% a year ago and 37% up from last quarter. On a recent call of CFO Council members during which they are granted anonymity to speak freely, a financial services CFO shared data that their firm collects showing that while consumers are still traveling and eating out, I know, I'm sorry, it's what I've been saying, the transaction value for even these activities are down. They're not pulling back entirely, but they're most certainly finding less costly ways to accomplish their goals. Food sector CFOs on the call said they are heavily focused on value right now, with one specifically invoking the term value war. The largest percentage of CFOs, 38%, still expect a rate cut from the Fed in September, but that is closely followed by 29 who don't think that cuts are coming in 2024. So the second largest group don't think there'll be any cuts. Still, between forecasts for a cut in September and November, December, one cut before the end of the year remains the majority position, consistent with the Fed's own view. At the Fed's, by the way, reminding you what my statement has been since February, no cuts this year, but maybe one, okay? Chair Jerome Powell said the central bank isn't ready to start cutting rates, but noted that while inflation is still running too high, the pace of price increases has come down significantly. CFO's overall view of the economy has slipped, but it isn't dire. 1/3 of CFOs still see a soft landing ahead. 1/3 of them say a soft landing, but that is down from half who felt good about a soft landing scenario last quarter. While that has dropped, it is still twice the level of confidence in a soft landing compared to what CFOs expected in the year-ago survey. A little over half of CFOs say the economy is either in a recession. 54% of CFOs say the economy is either in a recession or will enter one between the second half of this year and the second half of 2025. And when asked to choose a trend to the stock market, more CFOs are now inclined to forecast a pullback, with just under 60% saying it is more likely the Dow Jones Industrial Average falls back to 35,000 rather than reach 45,000 for the first time. Okay, one last story here. Just breaking from Market Watch, the numbers. This morning, new home sales fell 11.3% to an annual rate of 619,000 in April. Boy, these numbers come in late. From a revised how come they don't know May? From a revised 698 in the prior month, the Commerce Department reported Wednesday. This should be no shock at all, but it is a shock to the people that were estimating these things. They thought it was only going to be down a bit. It's way down more than they thought. But we saw these numbers already. This May numbers, I don't even know why I'm reporting it to you. The number is seasonally adjusted and refers to how many homes would be built over the entire year if builders continue the same pace every month. Where are the, by the way, housing is in a recession. It's been in a recession. It will continue to be in a recession. I see no evidence that housing is not going to be a recession 12 months from now, okay? All right, where are the markets now? Here we go. Let's take a look and see if Tesla is still way up. All right, we're still up $5.15. The Dow Jones is down 122. The NASDAQ is up 7. S&P is down 10. The Magnificent Seven, Apple is also doing well this morning. The rest is mixed, with NVIDIA down $1.68. We've got the Cathie Woods mixed, but more down than up. Continuing, the Cathie Woods are not doing well right now. Cathie, you're gonna have to put some kind of a prop under some of these people. Actually, the numbers in the movement in the Cathie Woods this morning is very narrow, pennies, not dollars. Okay, let's go ahead. We've got the Dow down 0.32, NASDAQ up 0.04, S&P down 0.19, and Tesla up 2.58. Still around $5, $4.83, but this is down from the very high of the day. Again, I would expect to see some profit taking on such a fast run up. All right, let's go ahead and take a look at the bonds. The 10-year, my goodness, no wonder the Cathie Woods are down. The 10-year has climbed 7.4% this morning. That is unusual. I don't know how to I don't know what's pushing that number. I know there was supposed to be a bond issue this morning. Maybe it didn't go well. Anyway, we're back up to 4.31, 7.2 basis points up this morning. The 2-year is only up 7.2 basis points on the 10-year, 5 basis points on the 2-year, making the spread 40. So the spread coming down to 40 something basis points, and the 2-month is actually down this morning, down 0.3 of a basis point. So that spread has also then dropped dramatically. It's down closer to 100 from being well over 110 almost for the last, I think, maybe like 2 weeks, I think. All right, so spread reducing is indicative, put this a one data point day, okay? But the big data point here is that the 10-year is up. The yield's up 7.2. All right, let's go ahead and see what's happening with oil. Oil is up 31 cents, nothing significant there, 81.10. Natural gas down 3.48 to 2.66. That's a pretty significant downward move in summer. Gold down 21.90 to 2,308. That is a very low number now. Now we're starting to see it pulling back. If it pulls under 2,300, that would be, I think, significant. Silver down 0.36% at 28.75, way under the $30 plus it was a couple of days ago. Copper also down 0.83. So precious metals and also copper dropping. Copper at 4.341, way down from the 5.1, 5.2 that it was just a month ago. We have got Bitcoin it popped back up yesterday. Now it's paying some of that back down 191 to 61,736. We have got the yen slumping. There was a lot of talk that the Japan central bank would be intervening. I guess they haven't intervened yet. Traders, they say, are on red alert on this slump from the yen. That's all we got, except going back to check on where Tesla is moving now. Tesla is up, picking back up again, right after I said that it wouldn't be able to hold these levels. It's back up $5.64. All right, listen, yesterday I did a video where I talked about where it's still, this is why the stock is up. It's because of my video yesterday. Did you watch it? I talked about how Tesla can still hit 2 million vehicles this year. In fact, probably will, because there's so many. I think I listed 15 ways that Tesla could turn things around in the second half and have much more substantial sales. They have plenty of capacity, plenty of plant available to be able to increase numbers dramatically. They just need they need consumers to come out. Well, there's a whole bunch of reasons why those consumers might come out. That's what I talked about. There's the card. If you didn't watch that one, you should really go back and check it out. All right. And then what else do I have to say to you? Oh, yes, hit like and subscribe, all that stuff, and join Patreon. It would be lovely if you would join Patreon. All right. Let's see what happens the rest of the day. We'll see. Jeff Lutz and I will hopefully be talking about Good News Wednesday. If we continue this nice up move caused by FOMO or by my video from yesterday. I'm not sure which. It's been great talking to you.